As you can see here, after this bearish trend, the market is starting to go up, and this indicator shows us that this is the end of the bearish trend and goes the extra mile to even predict that this bullish trend will go up for 15 candles. Now, if we let the market play out, you will realize it didn't go up for just 15 candles, but way beyond that. So while 15 candles alone would have been a nice upward move to make some money, the market outdid the indicator prediction and went up for a total of 86 candles as indicated here. You can even double check for yourself, and as you can see from the beginning of that trend to the end of it, it was indeed a total of 86 candles. Now here, we had another bearish trend starting, so the indicator has shown us that this is where this bullish trend will reverse, and it has predicted the number of candles that the market will go down by, and it says it's 25. So let's see if it goes down by 25 candles or more, or if it's going to be less. As you can see, the prediction was 25 candles, but it went down for 38 candles, so more than what was predicted, which is really good. Ladies and gentlemen, this is a video about the Trend Duration Forecast Indicator by ChartPrime. It's basically a tool that tries to predict not only where a trend will reverse, but it predicts where it will reverse and what the length of that trend will be in the number of candles. I'm going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like, or even better, consider subscribing to show appreciation. Let's get into it. We're doing this on TradingView. If you haven't signed up and want the same layout as mine, there's a link in the description, and you might want to hurry up and grab these massive Black Friday discounts. Open a clean chart of GBP JPY on the 15-minute time frame. In the Indicators window, search Trend Duration Forecast by ChartPrime and add it to your chart. It's an open source script, so you can review the logic on its page anytime. What the indicator is in one paragraph: Trend Duration Forecast detects a new trend with an HMA, counts how many bars each completed trend lasted, and then projects a likely length for the current leg. As the move develops, it updates a real length label in real time and shows a probable length extension so you can judge whether the current push is early, mid, leg, or late. A small table logs previous uptrend and downtrend durations, plus averages, so you can see context at a glance. Green marks uptrends, orange marks downtrends. Now for the components of this indicator, let's start with the trend ribbon. It's green when the market is bullish, and it's red when the market is bearish. During transitions between bullish and bearish, you'll notice these numbers. These basically indicate the actual length of individual trends. For example, this number is the number of candles during this entire bullish trend, and you can confirm that by measuring it yourself. And then this number is the number of candles during this specific bearish trend. So each trend gets to be labeled so you can know how long that trend lasted in terms of candles. This data is also tabulated in this table right here. The most recent is at number 10. So as you can see, this is 18. The length of this trend has been recorded here as 18 at number 10. And this is a bullish column. The table has a bullish column and a bearish column. On the bullish column, you'll only get the numbers for bullish trends. So this is the latest bullish trend, 18, so 18 is there. The previous bullish trend was this one, 86, so 86 is there. And then another 18, 18 is there, 6, 17, 10, let's see, 6, 17, 10. Tabulating these past trend lengths is important because they can use that data to get the average trend length so that it can be used to measure the average trend length as a forecast, which brings us to the next component of this indicator. This probable length is basically the forecast of the number of candles the indicator thinks the next trend is going to be. So if we are in a bearish trend, for example, this forecast isn't just guessed from nothing. Instead, it is the average of all these numbers. The average of the past 10 trend lengths is what is used as the forecast for the probable length of the next trend. As the average changes, the indicator will use this average to forecast or try to predict the length of the next trend. And it is that simple. Settings. Smoothing length controls how much the HMA is smoothed before the tool judges direction. 50 is a balanced default for the 15-minute GBP JPY chart. Trend detection sensitivity changes how quickly the line flips color. Lower numbers react faster, higher numbers filter more noise. 3 is a responsive but not jumpy setting. trend sample size tells the script how many past trends to use when calculating the forecast. 10 gives a stable average without overfitting to 1 or 2 outliers. You can also set the colors for uptrend and downtrend. I'm keeping green for up and orange for down, so the read is instant. Now for our trading strategy, right after the settings, we usually go straight to the plan. We're going to have 2 strategies with this indicator. For the first strategy, we're going to add 2 additional indicators for additional confluence. On the Indicator Search tab, you basically want to type the Volumetric Variable Index Dynamic Average, this one by Big Beluga, and you also want to add an indicator called Pine Trade's Market Beacon, which is our very own custom buy-sell indicator. Double-click on the VIDA indicator. On the Inputs tab, you want to change the length to 100. Under Colors, uncheck the Shadow option, then go to the Style tab and disable everything except the first Plot option. After that, make that plot line as thick as possible. Do the same for Market Beacon, double-click it, and on the Style tab, uncheck all of the options except the first Buy label and Sell label. After that, click OK. So we have 3 indicators here. The first one is Trend Duration Forecast, and we're going to be using it as a short-term trend identifier. Basically, we're going to use it to identify pullbacks within an overall long-term trend of the market. Every time it switches from red to green, we're going to take buy positions, and from green to red, we're going to take sell positions, but within the overall trend. We identify the overall trend using the VIDA indicator. If it's green like this with price trading above it, we're only going to look to take long pullback positions. If it's red with price trading under it, we're going to look for short pullback positions. Our final confirmation indicator is Pine Trade's Market Beacon, which is a buy-sell indicator that uses price action methodologies to plot these accurate buy and sell signals. How do we take a long position with this strategy? It's very simple. Condition number 1, make sure you're in an overall bullish trend. You confirm that by looking at the VIDA trend line. It should be green with price trading above it. That is a long-term bullish trend. After that, look at our short-term trend identifier, the trend ribbon from Trend Duration Forecast. You're looking for it to indicate a pullback. You just wait for it to change color from red to green to indicate the end of a market pullback. Immediately after that pullback is confirmed, wait just a few candles, and you want to see a long signal printed from the Pine Trade's Market Beacon indicator. Remember, the order of events matters. First, the color change of the trend ribbon from red to green. After we get the green trend ribbon, we start waiting for the long signal. You can wait a few candles. Most of the time they come 2 candles later or up to 10 candles later. Once you have the long signal like this, on that very candle, at the close of that candle, you take your long position. Stop loss under the most recent swing low, targeting a 1 to 1.5 risk-reward ratio. And to show you how accurate this strategy is, you can see here, this was our first long position, and here we had a second long position. Trend was bullish, we had a market pullback, this line went from red to green. And then after it changed to green, 1 candle later, we had a buy signal from the market beacon, and this trade was a profitable one. So that is 2 trades back to back. Moving forward, we're still in a bullish trend overall, so this was our next valid trade. Trend was bullish long-term, and the short-term trend went from short-term bearish to bullish, indicating an end of a market pullback. After the trend ribbon changed to green, we got a buy signal. So we take the trade, and this one was a nice and profitable trade, as you can see. Moving forward, this was invalid because the long signal should come only after the color changed to green. This one was not valid because it also came way before the color change. So easily, you can see that this strategy is super accurate, especially when paired with the Pine Trade's Market Beacon indicator. One thing to note is that Pine Trade's Market Beacon is a private indicator we created in partnership with ChartPrime. To get access, click the link in the video description and also in the pinned comment. That's going to take you straight to this page where you can browse all the available options. As you can see, by purchasing any of the ChartPrime plans, you get to try it risk-free for 7 days. And when you sign up, you don't just get the Pine Trade's custom indicators, you also unlock all the other premium ChartPrime indicators, including the ultimate trading toolkit for your price action analysis. You also get the Prime Oscillator, which is going to help you easily spot market patterns like divergences and trend shifts. You get the ChartPrime Smart Money Concepts tools and all the other indicators and features you see listed here. And it doesn't stop there. Just by scrolling through this page, you'll see you get 4 of the main ChartPrime indicators, weekly trading sessions, daily market insights from trading experts, access to the ChartPrime community Discord so you can chat with other traders, plus regular updates. And the features get even crazier when you upgrade to the ChartPrime Plus subscription. To get access to it, click the link in the video description. Now, for some reason, if you can't get access to our private indicators, there is another way to trade to utilize trend duration forecast. Delete the VIDA indicator and delete the Pine Trades Market Beacon, so we're only left with trend duration forecast. The main idea behind this second strategy is we're going to add the RSI indicator and predict trend reversals based on the RSI being overextended, either oversold or overbought, and then combine that with the trend forecast to take positions. How does this strategy work? To take a long position, it's really simple. You basically want to have a bearish trend, doesn't matter how long it is, as long as the trend ribbon is red. During that bearish trend, the RSI should get overextended to the downside, basically oversold. That means the RSI line went below the 30 level. After RSI is oversold, start to look for the ribbon changing color from red to green. When it changes to green, that marks our entry point. At the time the ribbon changes to green, also make sure the RSI line isn't yet at the overbought level. It shouldn't be beyond the upper band, the 70 level. It should be in between these two lines. Once you have that, you take your long position. For a short position, you do the opposite of this. To recap, for the long, ribbon red, RSI oversold, ribbon turns green, enter on a nice bullish candle while making sure RSI isn't yet overbought. Then flip those conditions for a short. And while it may not be as profitable as the previous strategy, it's decent enough, especially if you add other confluences like price action, support and resistance, and so on. Again, if you want access to Pine Trades Market Beacon or any other ChartPrime indicators we showcased, there's a link in the description. A quick word on expectations before we wrap. Trend duration forecast gives you a quantitative view of trend longevity, HMA-based direction, real-time length, a probable projection, and a history table to compare against. Use it with a higher time frame map and basic structure so you're not buying a late push straight into a weekly level or fading strength in the middle of nowhere.
It's a tool for timing and context, not a promise. This is not financial advice. Everything here is for education only. Trade a size that fits your risk, write your rules for entries, stops, and exits, and double-check your thesis before you click buy or sell. Backtest on GBP JPY 15-minute, forward test small, and only scale when your numbers make sense. If this helped, drop a like, and if you want more clean, testable guides like this, consider subscribing so you don't miss the next one. Thanks for watching. See you next time.